Hello everybody, welcome to the show. This is Trading with Livevol. My name is Stephen Choi, and this is where I trade my Reg T account, and I use LVX to trade. So let's kind of go to my trading account today. So I'm pretty flat, little down in Tesla and IWC. Maybe a little bit up in Facebook, but everything is pretty much flat. The couple of stocks that I want to talk about, the biggest one is AstraZeneca. So let me actually clear this out. So AstraZeneca, as you guys know, rejected Pfizer final offer for $118 billion or so, and apparently, according to the British law, they have until May 26, and that this is AstraZeneca to accept, or I guess since they use the language final for Pfizer, they can't bid on them again for another 3 to 6 months or so. So it was kind of running up. The reason I started trading was because it got kind of to a 52-week high, and the news was semi-out, and there was a lot of trading going on, so I thought there was some opportunity. So yesterday I did pretty well, and today basically what I did was I bought some puts, 67 puts for 95 cents. And then what this did was pretty much, this is my current position. So most likely, it seems like less and less chance that Pfizer will be able to convince enough shareholders to kind of have AstraZeneca to come back to the table. So most likely, you know, after the 26th, the stock might go down. So I wanted to make sure that I was covered because I didn't have this before. So this was my position coming in. Right, so I had this line that was kind of looking ugly, so I wanted to flatten it out. So I was kind of messing around with, you know, different options, and then now looks like it's a lot better, right? So my downside is this. So like my thinking is if nothing happens by May, and let's say for whatever reason now AstraZeneca can no longer get a higher bid from Pfizer for another 3 months, or basically even talk to them for 3 months, there might be a sell-off, right? There might not. I'm not sure, just because the news is out. So I was kind of trying to figure out how to take a shot at that happening, but you see, the reason I like it right now is if AstraZeneca stays right here by June expiration, I should collect $1,500, right? So I was thinking like there's less chance now maybe that it's going to finish in this range, so I want to kind of lower this maybe raise this a little bit, and maybe make this higher, right? So how do you do it? So I was just kind of on the Sims part of the chart, of the montage, you can mess around with it. So I was like, you know, how does it look if I bought 10 of these, right? And I'll look at my risk chart, and I'm like, oh, that's not too bad, right? So something like that, that's kind of what I'm doing. But you see how at 68 bucks, I lose 1,100, right? So I was kind of messing around with it, and I was thinking, because this person right here did this, let's see, it was October 65s. Right, so you see this trade, October 65 puts on May 20th. So basically, This is 10,000, not 1,000 on the open interest. My screen's just small. So here, 10,000, he sold this 10,000 times. So let me actually just put it in. It's going to be a little distorted because it's including my position. The guy bought this 10,000 times and then sold 700,000 shares. So if you look at the risk chart now, it makes sense if I shorted it. Right, so this is how it would look. So the way he was betting was the fact that either that Pfizer will make a higher bid and it'll end up somewhere here above 87 bucks, or if it doesn't and it's a standalone company, it'll be kind of 65 or lower, right, by October expiration. So knowing that this guy, this is what he thinks, and it's a pretty logical bet, right? My thinking is that, let me actually put in AstraZeneca. My thinking is that AstraZeneca will most likely go down if nothing happens by May 26th, but maybe not as down to as far as before, right? Because most likely what's going to happen is, and it might go down to 65, who knows, but maybe it might only go down to 67.5, right? So let me see. I might actually change my mind, but I was thinking maybe it might go down to around here, 65 range. So I have this working order where I am doing a butterfly, right? So I punched up a butterfly, right? And then I looked at the risk chart, and you see how now if AstraZeneca goes down, right? Now if AstraZeneca goes down, I have this upside. So I lowered this. I think it's less probability, and I made this higher. Of course, I made this lower, so I'll have to figure out how to take care of this, right? Maybe by doing this like 10 times, right? Something like this. And then I look at my graph again, and I'm like, oh, yeah, this isn't too bad, right? So this was kind of what I'm thinking, right? This graph is okay. I can live with this graph. And you see how I made the wings better, and I basically took down this one. So what I'm saying is that if this happens, you know, the chances of it being between 72 and 75 is a lot lower, which is most likely scenario, and I'm actually using all the money here to actually make sure that I put it here or here. What that means is either like by Monday, maybe they'll talk over the weekend, and something might happen where they extend it or whatever. And if they do, basically the stock will probably take an uptick, or if it doesn't, it might take a downtick, right? So this is what I was thinking. I was only working the puts right now. So you see working, you see AstraZeneca. I have this on, and also I have this on, but I don't think I'm going to get it, which is basically buying the 70-65 1x2, right? Because I think maybe that's where it might go. So the other case scenario without that might be maybe buying 5 of these and selling 10 of these, right? Because I'm thinking like 65 is as low as it's going to go. Let me see the risk chart. So, right, so this is how my risk chart would be if I did that. Basically, I flatten it out, and and I still have the upside. So like I have kind of this like long stock position, but basically I'm flattened it out from like 65 to 86. I just keep it flat, and hopefully like if they do make some kind of deal, or they come to some kind of agreement, basically it'll go to here. But most likely, the chances are nothing's going to happen, right? Which means the stock will go down. Looking at this chart, I was thinking maybe this would be where it goes, right? The 65. But I'm thinking naturally it might go higher, just because I think I would buy it at 65, knowing that they rejected $92 bid for the company. So, I mean, it might eventually go down to 65, but it wouldn't happen like this month, right? So maybe 67. Let me actually see how that looks. So if I did 50, 100, let's see, I'm going to take this off now. Yeah, so do you see what I did? I just moved it up this way, right? And now I can really lose a lot on the downside. But let's actually see what that, let's actually do. Okay. So basically, if I buy for even, that's great, but most likely that's not going to happen. So I'm gonna buy it for a nickel, right? I'm gonna send an order to buy 50, sell 100, and buy 50 of these. So that's what buying the 70, 67 puts, selling the 65. Oh, wait a minute, hold on. I'll be buying this. I'll be buying this, selling 2 of these, and buying this. All right, so it'll cost me a dime. Let's say I do it 25 times. So I'm buying 25 of the 70 puts, selling 67, buying 25, 65, send order. So I'll be doing 25 by minus 50 by 25. All right, so basically now I kind of have this like really funky downside, right? So I'm basically saying it's going to finish between 64 and 79, and that's how I'm going to manage it. And then I probably want to lower this one, right? Because the 75 is kind of useless to me. So I'll probably want to buy 10 of these and maybe sell 10 of these, right? Or even maybe even sell 10 of these. Right, so now I have this thing like that, and if it stays down here, I make some money. So it's kind of, you know, I'll see what happens. So I have 2 orders out now. So I have the 67, 65, 62 butterfly. I also have the 70, 67, 65 butterfly, and I have the 70, 65 put 1 by 2. So I'll see what happens. But it's a good way of kind of like, so what I do is I mess around on this simulation, and then I just wait for the risk chart to be like kind of the way I want it, right? So I keep messing around with it until I get this chart to where I want, and then if I do, you can do a sim to complex, and I'll actually fill out all the trades, right? So you actually put that in there. But for now, that's what I'm gonna do. So that's AstraZeneca. Let me go to Facebook. So Facebook is kind of tied to Tesla. So I'm kind of bullish on Facebook. So I had a time spread, but like the front month one got so low that I just bought it back for 17 cents. And now, maybe if Pfizer goes up to 60, if it goes up another buck or two, maybe I'll start selling some of these, right? Or maybe even June 65s for maybe over $1, maybe $1.20 or something. And what it'll do is it'll offset me paying for this. So I have a similar position on in Tesla, but Tesla, I did it in different strikes. So sometimes people ask me like, oh my God, are you worried that it's actually above 190 and you might actually lose this? I'm actually not worried. I did this for a $2 credit, right? So let's say for whatever reason, if the stock ends right here, right, 205, what I would do is I would just roll the June to July's. So now I would look at July options, right? And maybe roll into these, right? Or maybe roll in to these, July 190s again. So I'll just buy these and roll into that. There's $6 worth of premium, and so I'll collect $6. So if I sell it for, so these Junes, which still have like 4 weeks to go, you see how they have $7 value, or like $3.70 value in terms of premium. Basically, I will buy these back, right? For looks like for $15. So I'll buy these back, and then I'll get to sell July's 190s for hopefully more than 15, right? So that's kind of what I'm thinking of doing. So I'm just going to keep rolling. So don't worry about the fact that I went in the money. It's actually not bad, right? You want to kind of, the worst thing that can happen is like if it went back to 250 or if it went to 150. But as long as it's like hanging out here, it's a pretty good do for any time you're doing these time spreads. So don't be worried that you sold these and now they're in the money by $15. There's nothing to worry about. There's 3 weeks to go, and as long as Tesla stays around here, you're golden because you can just roll it into the next one, even if it's in the money option, right? All right, so it's interesting. I found these stocks in the last couple of days, but then I see that CNBC is talking about it, so I'm not sure like how great it is. But people have been buying these, the June 19s in IPG. For like 20 cents, and they're consumer cyclical. They're like an advertising company, right? So basically, the fact that they're buying all these calls seems a little unusual, but the stock's actually going up as they're buying the calls, right? So that's one. The other one, and then they talked about it in CNBC. And then DHR as well. Basically, today, people are buying a lot of calls. So this guy was rolling this into the Julys. The thing is, I don't know when he did this June. So they talked about it, saying that it's already made money, but so maybe on May 14th. May 14th is when they did it. Right, so they bought it for 210, looks like. But looks like he was rolling the, so he was rolling the 72s. Right, so he was selling the 72s, rolling into, let me say 72s. Right, so he was rolling out of the 72s into 75s, and now is rolling from 75s into 77s, July. So, and then Kramer also talked about this stock. So to me, like, everything is pointing for this stock to be bullish. Maybe what you can do is, let me actually see if I can do this. Buy this. And sell this. Yeah, so that spread will be $1.85. So that's what? That's 78, 79.35. So you're still paying $1 premium for this. Let's look at the stats. A lot of calls. Percentile is pretty low, and looks like the vol's like upticking, right? So usually it's probably not great to chase. I wonder what would happen if I did the 80-80 spread. Yeah, to me, either way, I pretty much, I think what's happened is I kind of missed the boat already, because this guy's already trading. But I think in terms of like being long, there might be some upside. So maybe if there is like some kind of pullback, I'll put like a note on my notebook, the chart, to check. And if it happens, I'll just come back to it. The other one is COH. So basically, seems like there's some interest on these Jan 35 puts. So people keep buying these Jan 35 puts. So yesterday they bought, the open interest was already 22,000, and then now they're piling on. The original trade was done on January 28th. And so it took me a little time to find this trade, but I was just looking at the large bars, right? So you see how this guy originally bought, and this could be two separate guys. I think it is two separate guys. This guy bought the 52 puts 10,000 times and then sold this 20,000 times 1 by 2. And it turned out to be a pretty good trade because it's down 20% since he put that trade on January 28th. And now it actually looks like somebody else is going and buying, and it could be this guy, who knows, but basically he's not closing that position, right? Just people adding to it, right? So they keep adding to this position, which doesn't sound too good or bullish for Coach. It's had some, it looks like it's losing some steam, and so we'll see what happens, right? But apparently people still think there's room for downside. So that's about it for today. So I didn't cover too much stock, but I just went a little bit more into detail. I'll be on to talk about earnings in about 10 to 15 minutes. one note, tomorrow I will not be doing a video blog. John Bloor will put one up. He's a great guy, so he'll put it up. I'm not sure exactly when he'll put it up, but he'll put it up there. So tomorrow, just for the guys who actually watch these videos, I will not have any video for tomorrow. So hope your training goes well, and I will talk to you guys on Tuesday.